Welcome to our channel, and more importantly, welcome to another educational episode. This video is the second part to the video that I posted last week Friday relating to the massive run that we have seen in Bitcoin over the past few months. If you haven't seen that video, click the link in the top right hand corner to watch it. I suggest that you watch the part 1 video if you haven't already, especially if you don't have a strong understanding of Bitcoin and blockchain technology. In this episode, we will be taking a deeper dive into the fundamentals that are supporting this bullish behavior we are seeing in Bitcoin currently, as well as we will discuss the factors supporting a continued push to $100,000. Everything I will be discussing in this video is a function of my own opinion based on the research and analysis I have done in analyzing the market. Stick around to the end of this video and remember to drop a thumbs up on the video and subscribe to the channel if you like the content. Also remember to turn on our channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so that you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. So there's no denying that over the past few months we have seen a monumental increase in the value of Bitcoin. But we've seen this price action happen before back in 2017, which ended in a severe crash of the cryptocurrency. But what makes this rally that we're currently seeing different than what happened in 2017? Now that's no easy question to answer. However, what we can do is look at other commodities that may perform similarly to Bitcoin. And oddly enough, the fundamentals of Bitcoin and gold are quite similar, hence why Bitcoin is also known as digital gold. So here in this news article, according to Bitcoin.com, the chief investment officer of BlackRock, which is essentially one of the largest asset managers in the world, is saying that cryptocurrency could possibly replace gold within the next few years. And he's saying this mainly because of the similarities between Bitcoin and gold. And that's quite a significant statement from a large asset manager, and we'll get into the reasons why that's so significant later on in this video. But moving across to another article on Bitcoin.com, we can see that the government money printing has been one of the major fuels to the bullish nature of Bitcoin, and that's something that didn't exist during the 2017 bull market. And Bitcoin.com has gotten that article from Bloomberg, who are one of the major news providers to the US. So moving across to a chart that's comparing Bitcoin, which is highlighted in blue, gold, which is highlighted in gold, as well as the money supply that's entering the markets, highlighted in green, we can clearly see the correlation as projected by the articles is shown here, in that gold and Bitcoin responded quite similarly once the government announced the stimulus plans towards the end of March. They both went on massive rallies that either eclipsed their all-time highs or came relatively close to their previous highs. So that just goes to show that gold and Bitcoin are significantly correlated right now due to that excessive money printing. But it's not just their mass correlation that is causing them to respond quite similarly. It's also, as I mentioned earlier, because of their similar fundamental principles. Now remember, as stated in part 1 of this video, there are only going to ever be 21 million Bitcoin in circulation, of which 18.5 million are currently in circulation. So we have a reducing supply of new Bitcoin entering the markets. This is essentially the same for gold, in that gold is mined at a predictable rate every single year. So if we take a look at this table in front of us, we can see that under the row that says sovereign and government issued, both Bitcoin and gold are highlighted in the low category. This essentially means that the government has no control over the amount that enters circulation. However, for fiat money, and in this particular scenario the US dollar, the government can essentially print as much of it as they like whenever they like. And that leads us to the row above, which talks about the predictability of the supply of the instrument. So as you can see, the fiat US dollar is the only one that is classified as low. And that's because, as I stated earlier, the government has complete control of whenever there's a supply shock of new money entering the markets. However, for both gold and Bitcoin, their fundamentals align because there is a predictable nature to how the supply will go of new amounts of them entering the market. That is, more importantly, not controlled by the government. Now it's quite easy to sit here and talk about the comparison of Bitcoin and gold, but really and truly what we're really after is, why does Bitcoin have significantly more upside than any other instrument, including gold, in the world right now. Now, in order to understand that, we first have to quantify the amount of money that exists in the Bitcoin market right now. And the way that we determine that is by looking at the market capitalization number. So what the market capitalization is essentially the value of the instrument, in this case Bitcoin, which stands at around $18,500 per Bitcoin on the day that I'm recording this video, multiplied by the total amount of Bitcoin currently in circulation, which stands at around 18.55 million Bitcoin. And if we multiply these two numbers together, what we can determine is that right now there's around $300 billion currently sitting in the Bitcoin market. Now, this may seem like quite a lot of money. However, if we take a look at other instruments, we'll see that this is just a small fish in the large ocean in terms of the amount of money that's actually circulating within our economy. So if we take a look at this slide here, we can see that right now there's around $10.9 trillion in the gold market, meaning that the gold market is currently sitting on a dollar basis around 40 times larger than that of the Bitcoin market. So this is represented visually here by these diagrams. So if you're more of a visual person, you can see just how small the Bitcoin market is in comparison to the gold market. Extending this same logic to the world stock markets, we can see the Bitcoin and other cryptocurrencies are around 300 times smaller than the stock market, meaning that there's 300 times more money flowing in the world stock markets than there are currently in Bitcoin and other cryptocurrencies right now. And as you can see, based on this visual representation, that's quite a huge difference. This also extends to the total money supply, or basically the amount of money that we have in circulation, is that there's a lot more fiat currency currently in the world than there is cryptocurrency, and naturally so. But what that leads us to is to scenarios where Bitcoin, if it was to get as large as some of these other markets, then there's a lot of potential for upside in this cryptocurrency. So if we take a look at this next slide, we can see that if we had any amount of money start to flow, even if it's just a small portion to flow into the Bitcoin market, that could have a tremendous impact on the valuation of Bitcoin. Now, it's important to note that in the world's markets, the price of an instrument or a commodity or anything is determined and directly proportional to the amount of money flowing into that market. So if we was to grow from a market capitalization of 300 billion US dollars to a market capitalization of around $2 trillion flowing from other markets, then what we would end up with is a $100,000 Bitcoin. Now, when we take a look at the market caps of these other instruments that we've considered in this video, we can see that this is very likely, considering the fact that the Bitcoin market is very small right now and we're starting to see somewhat of mass adoption into the cryptocurrency, which leads us into the next topic that we're going to be talking about. And talking about mass adoption, that's exactly what is necessary to cause the amount of money that flows into any instrument to become higher, which is essentially what we need to get Bitcoin to that $2 trillion market capitalization. But taking a look at this article, we can see that there are actually major retailers who are starting to adopt Bitcoin as a form of payment for their services. And those major retailers include Microsoft, Overstock.com, Home Depot, and Starbucks is getting ready to release the fact that they'll be accepting Bitcoin as well. We also have Whole Foods, who accepts Bitcoin, and Newegg.com. So these are just a few of the major retailers who are beginning to allow Bitcoin as a form of payment, which will definitely lead to mass adoption. Furthermore, we're starting to see more and more institutional firms starting to take Bitcoin as a part of their assets under management. And here is a small list of some multi-million and billion-dollar funds who have started to put Bitcoin as part of their portfolios. And of course, this list is ever growing because more and more hedge fund and mutual fund managers are starting to realize the potential in the cryptocurrency. Additionally, Bitcoin is becoming more and more available on different exchanges, with PayPal being the latest provider to officially launch Bitcoin on their servers. So now users can buy and sell Bitcoin on PayPal's network. So as you can see, there are more and more factors that are leading to mass adoption of Bitcoin, and I highly doubt that it's going to stop here. because larger and larger businesses are beginning to become more and more bullish on the cryptocurrency. Coming back to the table that we looked at earlier, comparing gold, Bitcoin, as well as traditional fiat currency, we can see that there are a number of areas where Bitcoin excels in comparison to its counterparts. Now, two of the major areas that Bitcoin excels is the fact that it's decentralized, as well as the fact that it and other cryptocurrencies are smart or programmable. Now, I'm not going to go into any specific detail on this nature of Bitcoin because it's a whole nother topic in itself, but what I will do is produce another video that talks about what we call decentralized finance, or DeFi, which speaks to this programmable nature of cryptocurrencies. But if we take a look at some of the other areas on this chart, we can see that Bitcoin is highly portable, meaning that it's easy for you to transport from one location to another, because essentially all you need is access to your phone in order to transact using Bitcoin. Another thing is that Bitcoin is highly divisible, meaning that you can hold fractional Bitcoins. However, it's a lot more easy to hold fractional Bitcoins than it is to hold, for example, a small portion of gold, because gold is so heavy and not very transportable, as well as to hold small amounts of dollars, because carrying a lot of coins around is quite annoying. Furthermore, out of the three, Bitcoin is also the most secure, mainly because of the reasons that I explained in part 1 of this video series. And furthermore, Bitcoin is very easy to transact because it's easy to send other people Bitcoin, similar to how it's easy to send other people money. Furthermore, we know that the supply of Bitcoin is pretty much fixed at 21 million, and so its scarcity is very high in comparison to that of the dollar, which is very low, and gold, which is moderate. So as we can see, Bitcoin excels in a number of the categories, and even in the one where it has a low rating, that's only because it's not issued by the government. So all that speaks to is the lack of control that the government has over people buying, selling, and transacting using Bitcoin. So essentially not much of a big deal. So as you can see, based on the explanations that I covered in part 1 of this series, as well as in this video, there's a lot to be optimistic about regarding Bitcoin. Currently, today as I'm recording this video, Bitcoin is sitting around $17,500, pretty much very close to its previous highs that it set towards the end of 2017. And in my opinion, this is just the start of the bull market. Based upon the reasons that I covered earlier, Bitcoin is heavily undervalued just due to the amount of money that's currently sitting in the space right now. And I believe as Bitcoin becomes more and more adopted over time, and the more and more that the government prints money, this is just acting in a bullish favor for the cryptocurrency. So I'm definitely expecting over time for Bitcoin to rise from where it's currently sitting up to a price of around $100,000 in the short term. Now, this doesn't mean that we're not going to have short-term corrections on the way up to $100,000. I am very much expecting large pullbacks of possibly 20 to 30%, which is pretty normal for Bitcoin due to the fact that the cryptocurrency is extremely volatile. But as we continue to see more and more people adopting the cryptocurrency and more money flowing into the space, then that puts tremendous upside potential on Bitcoin. Now, we also have to consider the downside risk, because of course there's no 100% guaranteed way to make money off of anything, and there's always a bearish case for anything that we may be considering investing in. So the main downside risk that I have identified for Bitcoin is if there's any sort of extreme regulation that comes into the space from large governments such as the US government or the UK government, essentially banning the buying and selling of the cryptocurrency. But honestly, I don't think the risk of that is very high, just because I think that if they were going to do it, they would have done it already, seeing the amount of money that is flowing into the space right now. But of course, we can't sit here and be oblivious to those things that could happen. Personally, I believe that there is much more upside in Bitcoin than there is downside, simply because this technology is new and it has not gained wide-scale adoption as yet, even though we are starting to see more and more adoption occur in the market. I like to compare Bitcoin to the internet, because in the early days of the internet, no one would have thought that in the future we would be so reliant on the internet as we are 20 years after the first set of people began using it widely in our lives. So is Bitcoin the new internet? Well, we'll just have to see where it leads us. With that being said, this concludes our part 2 episode on our Bitcoin series. And these are the reasons why Bitcoin has so much high potential, contrary to popular belief. Thank you to all who took the time out to watch this video, and an even bigger thank you to those who made it to the end of the video. I release at least one of these educational videos on the channel per week, in addition to my weekly market breakdown, which is released every Sunday. If you haven't already, help us out by dropping a like on the video and subscribe to our channel so that you don't miss out on any of our future videos. Thanks and peace out.